afternoon, everybody, and welcome to the latest episode of Cannabis Unlocked. I'm your host, Jordan Youkilis, founding partner of Key Investment Partners. Today, I'm very honored to be joined by my friend, Nasos Makriyiannis, the president of the KOMAND Group, an M&A advisory firm based in Toronto and focused on the international cannabis markets. Nasos, thanks so much for joining the show today.
Hey, Jordan, thanks for having me.
Well, I really appreciate you taking the time to give the listeners your history in the cannabis sector and beyond, and all of the exciting projects that you're working on, particularly in international markets and helping U.S. cannabis operators access those markets. But before we get into all that, I like to start with just a little bit of background on who you are personally. Where'd you grow up? What was your career steps that eventually led you to the KOMAND Group?
Whoa, going way back, Jordan, where I grew up. So I actually grew up in Abu Dhabi. So I'm originally from Cyprus, Greek Cypriot, so EU citizen. Was raised in Abu Dhabi in the UAE back back in the 80s. I have to age myself, and then moved to the US where I studied in biomedical engineering at Boston University. Worked in the US for a few years, and then moved to Canada to focus on my MBA. And from there, I founded the company, the KOMAND Group, back in the early 2000s. Back then, when we started, we were sort of a boutique management consultancy. So we're a few partners, really focusing on a few sectors. Did a lot of healthcare work, and that's actually how we got into cannabis. It was through healthcare. We were brought in on a mandate with one of the big four tax and consultant companies to help a multinational pharma company. They specialize in pain management, and they brought us in. This was going back close to 10 years ago. Mm-hmm. Before even recreational legalization in Canada, which was 2018. And this company was basically, they wanted to look at their next 50-year horizon. So cannabis was certainly an interesting sector for them. To obviously cannabis. There's a lot of evidence that cannabis supports with pain. I mean, 70-80% of all medical cannabis is prescribed for pain. This company was in the pain management space. So that was sort of our first mandate in cannabis about 10 years ago, and we quickly decided as a company, as a company that it's where we want to focus. We just saw obviously the upside of cannabis. It was new to everyone. We liked the fact that it was also restrictive to maybe the larger investment banks and consultancies.
Yeah.
So whereas we were a smaller boutique company, so we didn't have those restrictions. Based in Canada, a lot more loose. So yeah, that's when we really dove in and just really focused on just going very deep on cannabis, and we've been doing that ever since.
Yeah, wow, that's great. And very similar thesis to my partners and I when we decided to start a buy-side cannabis firm, because you're right, there's just such limited institutional folks who can really access the sector. And I think 2016, we probably all would have thought that those restrictions would have loosened sooner than they have. But it's I think that been a benefit for the folks that, like us, were smaller and more nimble and able to get into the sector in early days.
Yep, exactly.
Yeah. So you made a pivot into cannabis, like you said, after that first project. Canada, if I remember, legalized federally in 2018. So would love to hear your thoughts on how you've seen the Canadian market evolve over that time, and then maybe we can talk about international markets more broadly.
Sure. Yeah, sure. So 2018 is when Canada went recreationally. Before there was, a fairly strong medical program. The medical program still exists today. It makes up, a small percentage of the market. Over that time, I mean, obviously there was that boom cycle after 2018. A lot of capital came in. We had some big strategic plays with Canopy and Constellation. Some of the tobacco companies came in a big way. I think since 2018 there was essentially about $42 billion of capital invested in cannabis in Canada.
Wow.
on the market size, the aggregate market size, or the cumulative market size, I should say, I don't think has hit 42 billion yet. So, it gives you an idea of why there were subsequently, after that boom cycle, there were subsequently, many, CCAAs, so the sort of the Chapter 11 of Canada, a lot of bankruptcies, a lot of capacity was created. The demand was there, but at some point there was just, too much capacity as you'd expect, with so much capital flowing in. So, what that's done in Canada is, we've seen major price compressions over the last few years. I would say, I guess on a promising note, in the last 6 to 9 months, the price is kind of stabilized in the wholesale market. But, as a result of this, what's quite interesting is that, as there was this oversupply, the international markets opened up, right? So Germany sort of opened up and legalized in 2017-18, really started opening up in 2019. The UK opened up a bit. Czech, is another market that we're actively operating in, that opened up. So what that did is, because cannabis is legalized at the federal level in Canada, that allows for cannabis trade. So the Canadians, quite astutely, they really started focusing that excess capacity in the export market, and now Canada dominates the export market. About sort of half the world's cannabis is imported from Canada. In Germany, as an example, there were about 200 tons of cannabis imported in 2025, and about half of that was from Canada. So that was an interesting it was an interesting expansion for Canadians, with the added benefit of better margins internationally. There's some elements that allow for a higher margin for exports, including you don't have to pay excise tax as a Canadian if you're exporting. Some other fees, like data fees when you're listing in Canadian dispensaries, don't apply when you export. So it out of that oversupply situation just came another huge opportunity that Canadians have leveraged.
Yeah, really interesting. And it is funny to think through the oversupply issue and how that's correcting. I mean, I'm curious, have you seen any sizable grows in Canada go offline and that help correct the problem, or it's really more a demand side part of the equation that's helping normalize, because now you're picking up all that demand from international markets like Germany?
It's look, it's a bit of both. I mean, there were some sizable companies that went offline, but if you look at the available capacity today in Canada, rough number would be that the capacity is being utilized at about 60%. So there's still tons of available capacity in Canada today, even without any new expansions or new investments. So it's I would say it's less about the available capacity shrinking. I think it's really more about the international markets opening up.
Yeah, that makes sense. And how do you think about Canada from a long-term perspective? I mean, I know one concern investors had is just given the climate of Canada and the high cost of labor, I think there's a question of, is it going to make sense to grow cannabis in bulk in Canada over the long term? So I'd love to get your thoughts there.
Yeah, look, that question has been asked for years now. I think 5 years ago, 6 years ago, you would, if you had to guess, you might say, yeah, that Canada is just not, from a long-term perspective. You could look at countries like Colombia, for example, and say, well, there's no way you can keep up with Colombia in terms of the low cost. I don't think that. I think right now you could say that Canada is in fact a viable market, viable production market, because for a few reasons. One, that there is a lot of know-how that's required to operate at scale, right? As we knew in the early days, that was sort of one of the biggest issues, right? It's hey, I'm putting my team together, building a grow, and I have a great growers that I knew, whether they're from the legacy market or not. But then once you jump to actually growing and producing at scale, it's a different beast, right? And some companies learned that the hard way. With the luxury of recreational cannabis or adult use cannabis being federally legal in Canada, you have companies that are able to that have managed to scale up, that have managed to scale up at a national level, meaning dealing with all the all the logistics challenges that come when you're going beyond just your state or your province. And I think that allows Canadians to really just move up that knowledge curve and drop their costs through efficiencies, despite some of the cost drivers such as labor being higher than countries like Colombia, or the climate. We do have cheap electricity in some in Canada, especially in the provinces like Quebec. So that is also to Canadians' advantage.
Mhm.
So I think the short answer, it's a long way of basically saying that I think Canadian companies have are really continuing to optimize their operations, and I think it's easier said than done to come in and compete just because you're paying a lower average minimum wage or labor cost.
Right.
I don't think it's as easy as that.
Yeah, that makes total sense. And I think also as more of those countries around the border, South America, Africa, places like that, that maybe have a better labor cost structure and also more compatible climates for growing cannabis, the companies in Canada that are well managed, well capitalized will have that first mover advantage and be able to go put in operations in those countries. So I totally agree. I don't think it's a one country wins all type situation by any means, or one geography.
Yeah, and then Africa and South America, as you mentioned as examples, they don't have that domestic market, so they can't grow at scale as the Canadians can, and then compete on the export market. With South Americans and African countries are just competing on the export market only, which you can't hit the volumes that you do when you have the access to a domestic market as large as Canada's.
Yeah, that makes total sense too. So talking about Europe a bit, I know you were just in Germany for the ICANN conference, which I think is the largest European cannabis conference. So yeah, would love to get your thoughts, just high level. What was the sentiment at that conference? And then let's talk about the European market as you're seeing it develop.
Sure. That was the ICBC conference in Berlin. It's the largest B2B conference in Europe. I've been going to that for years. This was certainly a year of positive sentiment, right? I mean, the German market over the last 18 months has just exploded. Probably increased threefold. To 2.5 to 3x over 18 months. So huge boom in Germany. That had to do with essentially a deregulation, similar to S3 in the US, where the Germany essentially reclassified cannabis as a less harmful narcotic, or not a narcotic at all anymore. So that opened up telemedicine platforms that lowered sort of the risk of prescribing for just the German family doctors, the general practitioners. So Germany exploded. So this year at ICBC in Germany, it was very, very positive sentiment. A lot of the local, like the German companies, the German distributors, who are essentially the large buyers of cannabis from international markets, from Canada and other countries. They were very excited. They're continuing to be bullish on the German market. So they were looking to optimize supply chains. Looking for new supply partners. Looking for new opportunities, even outside of Germany. Now that they've sort of have a little bit of dry powder after a good year and a half to 2 years. So overall, very, very positive sentiment. I was a bit, I guess the one surprise I had, I thought there would be more U.S. companies. I expected this to be a big year for a lot of U.S. interest. And there were a handful, maybe not more than previous years. So that was a bit surprising to me. I thought sort of the US companies would be very interested. Again, especially with S3 on the horizon and potential international opportunities with S3. I did expect more Americans to be there.
Yeah, that's interesting. I wonder if the S3 news also just had the bigger cannabis companies more refocused on the US markets again, and just thinking that opportunity is more attractive.
Yeah, perhaps. That's what it is. Really focused domestically, which makes sense. You may make sure you have your house in order domestically before you look international. So perhaps that's it.
Yeah, possibly. And we were talking before we started rolling about the heterogeneity of Europe, country versus country, very similar to the dynamics we see in the US, state by state. So would love to get your thoughts on where else you've been working within Europe, and where you think are some other markets that are attractive areas of growth today.
Yeah, Europe. I mean, so just going back a little bit on our story. So we started covering Europe very early on. I think we were arguably the first North American advisory company to really start focusing on Europe. That was back in 2017, 2018, right around when Germany legalized. So we started covering Europe back then. We had an analyst working on it almost full time. Again, back then it was a tiny market, non-existent market. And because we were in so early, we also made a couple of investments on our balance sheet. We raised €500,000 and tried to set up a company or a facility in Greece, which we shortly then pulled out. It was a bit too early for Greece. Different story today. Greece is quite exciting today, actually, but that was 6-7 years ago. We also structured a joint venture and then became a shareholder in a Czech company. So this Czech company it's called Botagon. It's based in Prague. It really focuses on downstream activity. So it's a distribution and manufacturing company. Basically, we don't cultivate, we import products, cannabis, dried flower, and other products. We have a sales team on the ground. So we basically sell we sell our products through the medical system, pharmacies and doctors, and we sell in a couple of other countries as well. But the reason I'm mentioning this is because I'm kind of at an unusual position in that we offer our M&A advisory services, but we also have operations from our own balance sheet investments. So we really get to understand the European market at a very granular level. And that's I think that's the key word about Europe. It is heterogeneous, right? So you have the European Union as an umbrella, but really every country in Europe, there's no country in Europe that has a medical cannabis program that is identical to the next country. In other words, they all have nuances, differences, despite being part of the European Union. The European Union only governs certain elements of sort of product quality. That's essentially it. That's governed at a European level. And even then, there are different requirements for the same product in Czech versus Germany versus Poland versus Greece versus the UK. So that's one of the critical elements of Europe. It's it's heterogeneous, so there are pros and cons in each country. And if you're looking to enter Europe and even set up a supply chain as well as access end markets, you have to be very cautious. There are ways to do it, and there are ways to do it right based on your assets, your capabilities, and ways to do it wrong, right? So depending on what you have, if you have a brand, if you're really a big brand and not a grower, or if you're really more focused on being a brand versus an operator like a cultivator and grow processor, there's a certain way to enter Europe versus being a grow processor. So that's one of the takeaways about Europe, is that there are many ways to enter the market, and you really should explore all options to understand what each one means. For example, our joint venture that we structured in Czech Republic, that was very intentional. We had understood the markets, and we like Czech for a few reasons. In our case, it made sense because we followed a very asset light approach. We like Czech because Czech has a medical cannabis program for some time now, since 2014, I believe. Secondly, it's very easy to import cannabis into Czech because the way they classify cannabis, it's more of an API than a finished product, so that's very easy to import it. Thirdly, it's very close. It's a 3-hour truck drive from Czech to Germany, so exporting to Germany is a lot less expensive. Fourth, much lower cost country than Germany. Easy to do business, but sort of about a 30% discount than Germany when it comes to sort of your labor force and other costs. So it was a very intentional strategy for us to set up this joint venture in Czech, and that's a cautionary word I would give to anyone looking to enter Europe from the US, Canada, or elsewhere, is really understand the various markets and set up your configuration, your strategy essentially appropriately.
Totally. And you mentioned brands in particular, bringing them into international markets. Now, I think that's a great place to go next. I mean, let's say hypothetically you're the CEO of a cannabis brand operating exclusively in the US today. What would be some of your recommendations for analyzing where they want to expand into Europe, and also how they actually operationalize that expansion plan?
Yeah, that's I mean, we've been in discussions with quite a few brands ourselves for, to help them enter the European market, probably through our Czech company, but not necessarily, because that can provide that support. So, this is what I was mentioning. You really need to determine or be clear about what's valuable to your brand. So let's say you're a brand that's I guess less concerned about specific genetics, right? It's the brand that you're promoting. You have a particular, a minimum level of a minimum quality requirement for any product that has your brand on it. But really genetics and breeding is not as important for your brand. You're really more focused on the brand and the awareness itself. Then you can, one approach in entering the European market is to really focus on your licensee partners, so distributors around Europe. Perhaps you'd want to carve them out to decide, I'll have sort of a regional approach. So work with a large, German company that can service maybe just the German market because it's large enough that it requires its own focus, and then find a strong partner that will service the rest of Europe.
Mm-hmm.
But really, you're focusing on just the brand, and then as far as sourcing the product, because, and we can discuss exporting from the US if you want later on, but let's assume that right now, so we don't have to assume right now you cannot export from the US, right? So how do you get your product that the products that you're selling as a brand in the US, how do you get them into Europe? Well, yeah, if really genetics isn't a big part of it, then you can just sort of say, look, I'll set up a network of growers, whether they're from Canada, Europe, of course, Australia, I mean, anywhere, qualify them, and then basically say, look, you could buy from these growers. If you're the licensee of my brand, here are these sort of approved growers, right? That's one strategy. If you're really more protective about your genetics, I don't know, let's take perhaps cookies as well, that has sort of the brand, but also, the brand came from the genetics. Then you might, then you should consider essentially finding a contract growers, one or two contract growers that you either take a vested interest in, perhaps a minority position, or really have a very tight contract manufacturing agreement where they're the only one or two that can grow your product, so you control your genetics, and then follow the same strategy from a distribution side. Mm-hmm. So these are again sort of two models, and that the way you enter it really depends on your brand, your company, what you value most.
Got it. That makes total sense. How about, have you seen capital markets loosening up in Europe at all? I know, at least both in Europe and Canada, there were major contractions over the last several years, although Canada, at least being federally legal, I think has typically had a little bit more institutional access than most countries. But yeah, I'm just curious in Europe as a whole, I mean, are they still, even with some of the tailwinds like in Germany, struggling to raise capital at the same level?
Yeah, unfortunately, yes, that is still the case. In the capital market side, I mean, the active active investors in Europe are still sort of the large family offices. There were a couple of cannabis specific funds that were backed by family offices. So that's still the case today in Europe. Access to capital is still tight. I think Europeans are very open to strategics, quite frankly. We've seen I think we were chatting about it earlier, Jordan. We've seen in the last 6 months, we've seen what, 5 transactions that were transatlantic transactions, right? We've seen the organigram acquisition of Sanity, High Tide, which is a large dispensary chain in Canada, bought a large German distributor. Partially it was I think a 51% acquisition, probably with the option probably with an option to buy the rest. So, I think strategic capital is very welcome in Europe today because institutional capital is still pretty standoffish.
Yeah, totally. And I think that mirrors what we're seeing in the US as well, where institutions, I think even with rescheduling, it's not quite enough to get them over the line. But the smart strategics, especially the ones that aren't listed on the NYSE and NASDAQ, they're all over the space. And I think they're seeing the momentum back in our favor and really going to start putting some serious money back into the space in the sector.
Yeah, I mean, everything is moving in the right direction. There will be bumps along the way. That's been the case in cannabis for over a decade. So, I think S3 is moving in the right direction. I agree with you. I don't think that means that tomorrow there will be, uplistings in the US from Canada. I don't think there's, the institutional investors will be sort of running in, but I think that just increases the probability of that happening, in a year and a half to 2 years from now, as opposed to 4 or 5 years from now. I think that's what rescheduling has done.
Absolutely. And so over the next year or so, is there anything in particular you're excited about, or any specific projects that you're looking to work on that you want to get into more detail on?
I mean, what's very exciting for me is just again the direction that's where the direction where everything is going, including S3, including new countries, talking about commercializing cannabis in Europe. Like France was sort of a country that recently opened up cannabis sales only extracts today, but this is it's one of the largest it's one of the largest countries in Europe. That's potentially a new market over the next 2 to 3 years. So what's exciting to me is really actually getting to work with more U.S. companies. I think U.S. companies today, especially ones that have sort of managed their the debt cliff and have a pretty decent balance sheet. I'm excited to work with them and help them enter the European markets. I think today is the day. I mean, I think now is the time to do it. It doesn't have to be too expensive. I think even the recent transactions we saw in Europe. I mean, I think the High Tide Remexian transaction, I think that was at 3.5 times EBITDA, right, for one of the largest distributors in Germany. Yeah. So I think you can, as a U.S. company, I would definitely consider optionality. I would look at entering Europe with optionality, perhaps a minority position, with an option on it. Get to know the market, establish a supply chain, and then pull the trigger at the right time. Because 2 years from now, I would expect that the same assets would be probably twice as high, right? Especially as we progress in the U.S. and if we see some uplistings take place over the next 2 years, then we expect that sort of all companies will be trading at higher multiples. So absolutely. I would certainly take a serious look, as an American company, into how to enter the European market, because it is a high growth market for many years to come. It's a long term play that has even a lot of short term potential, as we saw in Germany the last 18 months. Yeah, I mean, I'm excited. We're working with what I really love about Europe is the heterogeneity we spoke about. Like, for example, we're working with a company out of Greece. Now, Greece, very different market than any other European market. It's the only market that has a commercial cannabis program where you're not allowed to import. So if you want to sell in Greece, you have to grow in Greece. There is currently one company only that has operationalized. So they basically have 100% of the market share.
Yeah, nice barriers to entry there.
not a bad barrier to entry. And it takes about a year to register your product anyway. assuming you have your ops down in Greece, we're working with a company that's pretty much going live, and any day now. It'll be the second company selling into Greece. I like to compare Greece. That the closest analog I have to the US is basically like Florida, right? Where you could only sell what you grow. There was no wholesale market in Florida. Very similar to Greece in that sense. So that's a very exciting market because it was initially built as an export market. So you can't import, but you can export. And now you have sort of an EU grown, cultivated, processed and released product that's that will have no regulatory barriers because it's grown in the EU. So you could easily sell it at any open European market. And you have that, and then you also have a domestic market that's really taking off. So again, as a US player, I would say, and then that's kind of actually that's part of the advisory work we're doing for this company. I would say, look, if they're open to essentially, offering a minority position and structure some sort of agreement. If you want to introduce your brand, you can introduce it to the Greek market and other export markets where the Greek partner is producing your product and exporting, selling in Greece and exporting to other markets. I mean, that's for me, that's a great play for a US company that wants to get their foot in the door. Probably more attractive valuations today than next year and 2 years from now. And get that head start over your competitors.
Yep, absolutely. Well, Nasos, this has been such a fun conversation, and I really appreciate you joining the podcast today.
Thanks for having me, Jordan.
Absolutely. If folks on the line want to learn more about you and KOMAND, maybe reach out to discuss a potential advisory engagement, how's the best way for them to reach out to you?
The best way would be through my email or my website. It's komand.ca, KOMAND.ca.
Perfect. Well, thanks again for the time, and I really appreciate it and look forward to getting together in person sometime soon here.
Thanks, Jordan. So do I. Thanks for having me.